we do have a little bit of exposure to higher energy costs because we do expect that um, to stay for the time being as we heading into the all important winter season for Europe as well as China, and these shortages for those energy assets are not easily to bring on board because of so many years of lack of investment. So for the time being, we expect that to stay, and we do have overweight position in those companies. Now, when we do look at the those this sector, is that they have performed incredibly well. So as investor, we sometimes do start trimming some, take some profit, and put into the others that perhaps has been sold off more severely than they should.
So in the broader commodities play, you're looking to the blue chips?
Yeah, look, we do because we think the likes of BHP, for example, we do think that's been sold off significantly more than what it should have been. Its earning does have exposure to iron ore. However, it does have exposure also to energy, to oil prices as well. Close to 10% of its earnings is going to be split out and fold into the Woodside venture, and that's not reflected in the share price relative to Woodside, underperformed close to 50% in the last couple of months. We think that's too much. BHP as a major miner, its earnings still come upgrade, and we think that the dividend yields continue to going to be very, very strong. So no, that certainly presents a very good buying opportunity.
All right, BHP is on the buy list. Now, Star Entertainment making news for a lot of wrong reasons, but is it one that you would like in your portfolio?
Yeah, look, we do have exposure to Star simply for its earnings profile and the asset backing. With the world returning to normal, when consumer can go out and spend on services and entertainment, this company is going to be very, very, very leveraged, one of the most leveraged, if you like, over the next, when this reopening taking place, which it is. So we do see a good return to growth, and for its premium assets, we think the share price has underperformed, absolutely way too much. Yes, there's some serious allegations into the sector, and the sector is well on track to improve on all of that practices. For the share price staying at where it is comparing to other reopening stocks, it represents a lot of value for us.
So, what are your favourite reopening stocks?
Star at this point. Look at, we have been sitting in the likes of Qantas, where the domestic travel will resume, and these names will, this company is very leveraged to the domestic travel, and that accounts for 70% of its earnings, so we think it will do well. So the share price has done very well. We also like that, little players we talk to, like OML, which is O Media, outdoor advertising, and big part of its advertising billboards actually in the airports. When people can fly, a lot of those earnings will return. So, you actually have reopening thematic across every sector of the market, and you just have to search for them.